Hey guys, in this video, we're going to show you how to master Fibonacci trading. Many traders use Fibonacci tools, but most actually use them incorrectly, which results in losing trades. As always, if you want more videos more often, please hit the like button, as it allows for our team to keep producing videos on YouTube. Now, a very important point first. Fibonacci is just like any other trading tool. It is not magic. Don't use Fibonacci on its own. Always combine the usage of Fibonacci with other price action concepts to increase the quality of trade entries and exits you have already identified. So let's dive right into it. Starting with Fibonacci retracement. So in an uptrend, these are the Fibonacci levels we look for. First, the 50% Fibonacci level, which is what we call good because it represents a deep pullback within a moving trend. Next is the zone and area between 50% Fib and 61.8% Fib, which is what we call great because it represents a deep pullback within a moving trend. Then we have the 61.8% Fibonacci level, which is what we call best because it represents a very deep pullback within a moving trend. In the opposite direction, in a downtrend, the same thing. 50% Fibonacci is good. The zone and area between 50% Fib and 61.8% Fib is great. And 61.8% Fibonacci is best. Now there's also the 38.2% Fibonacci level, which is very effective to use in a very specific use case, which we'll discuss later in this video. So two very key points. 1. Fibonacci retracement levels act as a form of support and resistance, as they represent areas of value within a moving trend. This means trade opportunities present themselves at these Fibonacci levels because the big boys look to add to their winning positions at these areas of value, which creates momentum for your trade. And 2. Treat Fibonacci levels as areas and not as a solid line or solid number because you use Fibonacci levels in combination with price action and not on their own, so it doesn't have to be a picture-perfect setup. Let's now show this right on the charts. You have your moving uptrend through the higher highs and higher lows. These runs are known as your impulse moves. These pullbacks are known as your corrective moves. Price starts pulling back right here, and you decide you want to look for a possible pullback long entry to trade with the uptrend. But you're not just going to jump in blindly at any random spot. You want to enter a trade setup at an area of value within the moving uptrend. So you take your Fibonacci tool. Click at the recent swing low here, drag it up to the recent swing high, and then move it a bit to the right so that it stretches out, and then click again to lock it in. Your Fibonacci levels are here to the right. So once price reaches any of these Fibonacci levels, you would look for candlestick price action followed by a trend change confirmation before taking a long entry. If you want to use the same Fibonacci tool and platform we use, go to tools.wisetrade.com. Now going in the opposite direction in a downtrend, you have lower highs and lower lows. These runs are known as your impulse moves. These pullbacks are known as your corrective moves. Price starts pulling back right here, and you decide you want to look for a possible pullback short entry to trade with the downtrend. But you're not just going to jump in blindly at any random spot. You want to enter a trade setup at an area of value within the moving downtrend. So you take your Fibonacci tool, click at the recent swing high here, drag it down to the recent swing low, and then move it a bit to the right so that it stretches out, and then click again to lock it in. Your Fibonacci levels are here to the right. So once price reaches any of these Fibonacci levels, you would look for candlestick price action followed by a trend change confirmation before taking a short entry. Let's now show this combined with price action. You have your uptrend through the higher highs and higher lows. Price pulls back to the 61.8% Fibonacci level, which represents a very deep pullback in an area of value within a moving uptrend. You had long wick candles form right at the Fib level, showing that price is indeed reacting to the Fib level. You then wait for a trend change confirmation before taking long trades, which you had through the bullish momentum candle that is also a candle color change. Now in the opposite direction, you have a downtrend through the lower highs and lower lows. Price pulls back to the 50% Fibonacci area, which represents a deep pullback in an area of value within a moving downtrend. You had multiple candles with the wicks sticking out that formed right at the Fib level, showing that price is indeed reacting to the Fib level. You then wait for a trend change confirmation before taking short trades, which you had through either the bearish momentum candle or after the double top pattern formed. So this was using Fibonacci levels in the simplest form. Let's now take it up a notch and combine Fibonacci levels with support and resistance and areas of confluence. Combining fib levels with support and resistance in areas of confluence gives you higher quality trade setups, meaning a higher percentage chance of success and of the trade going a greater distance for higher profits. So this reversal point here gives you a key level. This here is your area of confluence, where the support level, moving average, and Fibonacci all lined up perfectly. Once price pulled back to the area, you had a long wick candle form right at the area of confluence, and with the wick touching the 50% fib level. You also had a candle color change and inside bar, which shows momentum loss. Once you had an intraday trend change confirmation, you would look for long entry points. Let's show this again. You have a moving downtrend, followed by consolidation, then a break above and higher high, which shows the start of a fresh trend change and upwards momentum. These two reversal points here give you your key level. This here is where the support level and 50% fib level both lined up. Once price pulled back to the area, you had multiple candles with the wicks sticking out, showing a reaction to the area. Once you had an intraday trend change confirmation, you would look for long entry points. So again, these reversal points give you a key level. Price breaks through the very key level, showing how strong the uptrend is. Now you don't know if this is a false breakout or not, so one way to get around this problem is to look for a pullback entry, which you had right here, where the support level, moving average, trend line, and 50% Fibonacci all lined up perfectly, making it an area of confluence. You had multiple candles with the wicks sticking out and a double bottom pattern form, all which shows a reaction to the area. You can take a long entry after the bullish momentum candle and higher high, or for an earlier entry point, look for the intraday trend change confirmation. Now, going in the opposite direction in a downtrend. You had a short trade setup here, where the moving average and key level both crossed. This is also where the 50% fib level lined up. You had a candle color change and wicks sticking out, and created a successful short trade. Another short trade setup here, where the moving average and key level both crossed. This is also where the 50% to 61.8% fib zone lined up. You had multiple long wick candles form, showing a reaction and another successful short trade. Another short trade setup here. This is also where the 50% fib level lined up. You had multiple candles with the wicks sticking out and a double top pattern, all which shows a reaction and created another successful short trade. Let's show this again. This is the Tesla stock. You had a moving downtrend through the lower highs and lower lows, so you want to trade with the trend. This here is your key zone because of these reversal points. The 50% fib level also lined up perfectly. This presented two quick lower time frame short trades, in and out for a quick profit. Now let's go through a multi-time frame trade we took. You had your double bottom and break of trend line and higher high, showing a new uptrend and bullish momentum, so you want to trade with this upwards momentum. Price then pulls back to this support zone that was created from these two reversal points. And this is also where the 61.8% fib level lined up, which is a high quality fib level. This is also the start of an inverse head and shoulders pattern, which is a reversal pattern, and this would be an aggressive right shoulder early entry. Once price reached the area, you had multiple very long wick candles reacting to the fib level and support level, which presented a long trade opportunity. Now, a reaction does not equal a trade, as price can stall at the area and still continue downwards. Because don't forget that this is still a current moving downtrend. So what you do is, you need to look inside of these long wick candles, but on a lower time frame for any form of price action that signals a trend change from a downtrend to an uptrend. Let's then pull up the intraday time frame and put it beside this one. So on the left is the main time frame we just looked at and where you found your trade setup. And on the right is the same asset, but using a lower intraday time frame. This area here, where you identified the long trade setup, is this same area here on the lower time frame. What you had was a rising wedge pattern. And once the pattern broke above with a higher high, this confirms the trend change from a downtrend to an uptrend, and is when you would start looking for a long entry point using our entry and exit strategy. Let's now get into how to use the 38.2% Fibonacci level. When an asset is trending heavily, it won't always pull back to the 50% to 61.8% Fibonacci area. Often, you'll only get shallow pullbacks and not deep pullbacks. Now, you don't want to miss out on trading with a heavily trending asset because that's where the big money is made. This is where the 38.2% Fibonacci level comes into play. You use it in two very specific scenarios. Scenario number 1, when the 38.2% Fibonacci level lines up with an area of confluence. So you have a clear moving uptrend through the higher highs and higher lows, and you want to trade with the trend. This here is your very high quality area of confluence because you have a key support level, trend line, and moving average that all crossed. This is also where the 38.2% Fibonacci level lines up perfectly, making this an even better area of confluence, as you are at an area where continuation traders are looking to add to their winning long positions. Remember that the 38.2% Fibonacci level is still a good pullback area, as it represents roughly a third of the way of your previous impulse move. This is very key. So you had candles with the wicks sticking out right at the high quality area of confluence, which shows a reaction. And once you had an intraday trend change confirmation, you would take a long entry. Let's show this again. You have a clear moving uptrend with heavy momentum as it breaks clearly through the key level. As price pulls back, you had an area of confluence here where the moving average, very high quality support level with multiple reversal points, and 38.2% Fibonacci level all crossed. Once price reaches the area, you had multiple candles with the wicks sticking out, showing a reaction. So you would either take a long trade after price broke above the falling wedge pattern, or for an earlier entry point, look for an intraday trend change inside of here. Let's show one more. You have a moving downtrend through the lower highs. Price then breaks below the key support level and below the descending triangle pattern, showing the bearish momentum, so you want to trade with it. Price then pulls back to your area of confluence, where the resistance level, moving average, and 38.2% Fib area lined up, which presented a short trade opportunity. Now, you then also had a second continuation entry down here, as you had a support turn to new resistance level, moving average that crossed, followed by the 50% Fib level lining up perfectly, which presented another short trade setup. Let's now go through a multi-time frame trade setup. Now, there were two trade setups we took on this asset. This here was the first trade setup, where the support level, backside of the trend line, right shoulder of the inverse head and shoulders pattern, and 38.2% Fib level all crossed. Now, our second trade entry took place right here, but on the lower intraday time frame, using the confirmed bullish and upwards directional bias from the first trade setup here. So let's pull up the lower intraday time frame and put it beside this one. On the left is the 30-minute time frame we just looked at, and on the right is the 5-minute time frame. This here, where the trade setup we just identified was, is this same area here on the lower 5-minute time frame. Now, your second entry point was right here, where the support level, trend line, and 50% Fib level all crossed, which presented another long trade setup. Let's now move on to the second scenario for when you would use the 38.2% Fib level. When you have a trigger event that occurs before a 38.2% Fibonacci retracement setup. So when you have a recent trigger event and trade setup close by to the left, this gives the asset you are trading a clear directional bias with heavy momentum and speed. This means that you often won't get a deep pullback to the 50% to 61.8% Fib area in these scenarios due to the heavy ongoing momentum. Now, you don't want to miss riding the wave of this heavily trending asset just because you aren't at a deep pullback area, as these heavily trending scenarios after a trigger event is where the big money is made. So what you do is you look for a continuation trade at the 38.2% Fibonacci shallow retracement level after you had the trigger event close by to the left. Let's show this on the charts. This double bottom trade setup here is your trigger event. Price then breaking through the trend line, breaking through resistance, breaking above the moving average, and making a higher high further shows how strong this fresh moving uptrend is. So in cases like this, where you have so much upwards momentum, you often won't get a deep pullback to the 50% to 61.8% Fib area. This here is where your area of confluence trade setup resides, because the key support level, moving average, and 38.2% Fibonacci level all lined up perfectly. As price reached the area, you had multiple candles with the wicks sticking out, showing a reaction. And once you had an intraday trend change confirmation, you would look for long entry points. Let's show this again. This double bottom trade setup here is your trigger event. Price then breaks above the descending triangle pattern and trend line, breaks through the key resistance level,